Hi there, welcome to Kneppy Invest. Megaport. I remember listening to a podcast, would have been start of January, I think it was Live Wire, who asked a group of fund managers in Australia what company they would be investing in, who they thought would exceed expectations over the next few years. And Megaport was the most selected company. And ever since that podcast, back in early January, the share price of this company has dropped off an absolute cliff. Now, this is the first time I've done a video since about either late October, early November. At that point in time, the share price was above $20. And right now, the share price is 9. And really, the catalyst for the decrease in share price has been their quarterly reports, not only the one we saw recently, which has led to the share price dropping 30%, but also back in January, when the company released their December quarter results, we did see the share price drop 16% on that particular day. And that was a catalyst for a shift in sentiment. I think the shift in sentiment actually happened before that, but that reinforced the negative sentiment in this company. And the share price just keeps on dropping. So even though this is a fairly hyped company on the ASX, Megaport and Bevan Slattery sort of go together. And if you are bullish on Bevan Slattery, no wonder you would have bought some shares in this company. Now, fairly good growth over the past 5 years, ever since this company listed on the ASX. However, in saying that, this company hasn't shown me, and maybe to the market, because possibly the reason why the market is selling off Megaport right now is just the amount of cash this company is burning. And even though we have seen cash receipts, revenue growing, they haven't showed us that they can turn that into profits and operating cash flow. So at this point in time, this company is showing no scale, no operating leverage, and maybe that is why the market is punishing this company. Also, overall weakness in the tech sector is definitely not helping. Now, I'm going to do something a little bit different with Megaport, and quite a few videos after this. Instead of looking at charts last in the video, I'm actually going to look at the chart first, because a lot of my ideas come from looking at the charts. And if I see some bullish signs, a bullish signal when I look at a chart, I'll actually delve into their financials and actually what the company does if I don't know anything about the company. So for me right now, it all begins with the chart. So let's step back in time. And the last time I did a video was towards the end of October, start of November with Megaport after the September quarter Appendix 4C. And everything was looking quite rosy for this company back there. And this is the weekly chart of the company from the time they IPO'd in late 2015. Share price was in a well-defined uptrend and was near at an all-time high at $20.41. And that point in time, a lot of positive sentiment behind this company. So not only did we have the share price going up, positive sentiment, a lot of people really love this company, really good growth in a lot of their financials apart from profit and operating cash flow. So a lot of people love this company. But sometimes just because a lot of investors, a lot of fund managers love a company, doesn't mean the share price will keep going up. And Megaport is a prime example that sometimes you do have to pay attention to the chart, because just because the share price is going up doesn't mean that will continue. And things have really turned suddenly for Megaport over the past 4 months, or ever since the start of the calendar year. And this is the updated chart for Megaport, including trading from when I did the last video. And really, the share price high was when I did the last video. The share price has simply fallen off a cliff. You'll notice over the past, we'll say 5 months, there's been significant weekly drops in the share price. And two of those significant drops in the share price coincide when the company released their Appendix 4C back in late January, and then again in April when they released their most recent Appendix 4C, and the share price dropped 30%. So share price has dropped from a high of $22, which was in October of last year, to a current share price of 9. Now, on the last trading day, the 22nd of April, there was a little bit of buying that came in late on that day. So even though share price fell something like 20% the previous day, the day they released their Appendix 4C, selling continued into the Friday. There was a little bit of buying during the last part of the day, last half of the trading day. So potentially we will see the share price rebound, a bit of a dead cat bounce potentially. The other thing you'll notice, lots of volume coming in during the week. So really high volume. The last time we saw this sort of volume was way back in 2020. And that's not a good sign when you see large volume on a large share price drop. Now, I just want to briefly look at the daily chart here. And really it begins back, probably the catalyst for the shift in sentiment and the downtrend in the share price was really the January or the December quarter Appendix 4C, which was released in the middle of January. Share price decreased 16% on the back of that. There was a little bit of weakness before that. Share price had decreased from $22 to around $18, $19 just before they released that Appendix 4C. But the share price dropped 16% and the share price just kept on dropping over about a 2-month period, sort of between about February and March. Share price just went sideways, but again, a little bit of weakness just before the company released their Appendix 4C for the March quarter. And on that day, share price dropped 20%. And then the next day, April the 22nd, share price dropped another 9%. On those 2 days, massive volume came in. So a lot of shares were trading or changing hands. And at this point in time, just because the overall negative sentiment in the share price, downtrend in the share price as well, share price could fall further from here. I've already mentioned, I wouldn't be surprised to see a bit of a bounce, but there was no bounce after they released their December quarter Appendix 4C in January. In fact, the share price kept on dropping after that. So no guarantees there will be a bounce just because of the amount of negative sentiment right now in this company. I've always had trouble trying to explain what Megaport actually does. And the best way, in my mind, to explain what Megaport does is they allow their clients or people who work for their clients to connect to their data centers anywhere in the world. And that's probably what I would talk to someone about in an elevator, so the elevator pitch. So their mission is to be the global leading network as a service provider, enable customers with an agile networking methodology through Megaport connected edge strategy. So I have had a really hard time sort of wrapping my head around what exactly Megaport does, but I'm starting to get a better idea, even though I've never been a shareholder in this company. But if I do see the share price reach really good valuations, and if I see the share price starting to turn around, sentiment shifting, that's when I might take a position in this company. I still like to have a better understanding of what exactly they do, but I think I have a basic understanding at this point in time. Megaport was founded in 2013 by Bevan Slattery, probably one of the most famous names in Australian investing community. He's currently the non-executive chairman. They listed December 2015, and the current CEO is Vincent English. The largest, or one of the largest shareholders, not the largest shareholders anymore, is Bevan Slattery. He has 5.1%. It was over 7% last time I did the video, but he did sell some of his shares, which again caused a bit of angst among some of the shareholders. Now, last time I did a video, November 2021, share price was $20.60. That gave a markup cap to this company of $3.2 billion. Now, with the share price at $9.04, the markup cap is $1.4 billion. So if you thought this company was good value at $3.2 billion, you must think this company is now absolutely dirt cheap at $1.4 billion. And the ticker code for Megaport is MP1. It's really interesting to gauge or see how investors react when an insider or a member of a company's board, a CEO, or a founder sells some shares. Investors tend to act quite negatively when a company's CEO, founder, or part of the management team sells some shares. It doesn't always necessarily mean bad things are afoot. In fact, research has shown that the long-term share price, or the correlation between the long-term share price and a director selling out, there's actually very little correlation there. In the short term, it's actually different. There is a correlation there. So there are many reasons why Bevan Slattery might have sold out of 3 million shares at $13.05. Maybe it was to increase the liquidity in the company. Maybe he wanted to buy a yacht. He might have actually said in the actual announcement why he's selling out shares. I don't really care. It's not an absolute reason. It's not an absolute sign. The company is doing badly in their business. It can be a sign, particularly if a lot of the directors are selling at the same time. We saw that with A2 Milk a few years ago when a group of the directors sold out at the near all-time high in the share price. That was actually a good sign that things were not going well for A2 Milk. So this is just the directors' transactions over the past 4 to 6 months. And there's been a lot of selling by directors during this time period. Now, small amount of selling, we're talking about 50,000 shares, 10,000 shares, 17,000 shares. But it doesn't mount up a lot because Naomi Seddon sold 50,000 shares back in November and received almost $1 million from that. So Bevan Slattery's selling of 3 million shares was by far the biggest director transaction over the past 6 months. But the very fact that a lot of these directors are selling is not a good sign, in my opinion. I'd like to see maybe some directors start to buy where they see the share price down a fair bit. They see some value. That would be a good sign that the potential bottom in the share price has been reached. Now, the whole point of me doing this video was the Appendix 4C the company did release for the March quarter. I'm going to go back 1 year ago just to see how this company has performed over the past year, looking at growth in receipts, also looking in growth in spending. That's very important. I want to see companies grow their receipts, but I also want to see companies grow their receipts at a greater rate than their costs. That's probably the most important thing. And if they can do that and keep on growing receipts, that tells me the company is achieving operating leverage and the company has achieved scale. The company will become profitable. The company will become operating cash flow positive, free cash flow positive. And those things are very important because any company can increase their costs to increase revenue, cash receipts. The most important thing is to be able to increase receipts and revenue at a much greater rate than the cost. So those are things I'm going to focus on when I look or compare Megaport's Appendix 4Cs from 1 year ago to the most recent one. In this Appendix 4C back 1 year ago, receipts to customers 20.2 million. And this company does love to spend money. $8.7 million on product manufacturing operating costs, $9.8 million on staff costs, $4.3 million on administration corporate costs, and $1.4 million on leased assets. Because they spend a lot of money, they were operating cash flow negative in this particular quarter by $4.9 million. Not only that, they also spent $2.8 million on capital expenditure and $1.65 million on intellectual property. Those are an ongoing cost. I like to include those, even though capital expenditure, which is property, plant, and equipment, there could be some growth expenditure in that. They don't really break it down. I think a fair way to look at that is 50% of capital expenditure could be for growth purposes. They also received $5.6 million in the exercise of options, which was helpful. And that meant the cash burn in this particular quarter was not that great. In fact, cash on hand only fell from $144.8 million to $141.5 million. That is one of the biggest positives about Megaport is the amount of cash they do have. However, and this is a big however, the amount of cash in this business is dropping at an alarming rate. Now let's have a look at the most recent Appendix 4C. First thing we're going to focus on here is receipts from customers. How did that grow? In fact, receipts were up $8.8 million in the past year. So we're seeing good growth in their receipts. Now I'm going to focus on the growth in the cost. Product manufacturing operating costs up $3.7 million. Staff costs up $4.5 million. Administration costs up $300,000. We also saw increased costs in leased assets in advertising and in marketing. So the cost in this business actually grew at a greater rate than cash receipts. That meant the company was operational cash flow negative by a larger amount this particular quarter. In fact, it was $6.3 million. So this company is burning through a lot of cash. So even though they've grown receipts at a pretty good rate, they're also growing their costs at an even greater rate. Not only that, they spent $5.4 million on capital expenditure and $3.6 million on intellectual property. That's $9 million in those two spending areas, and they did not receive any money from the exercise of options. So if you add everything together, the cash on hand in this business fell from $104.6 million to $88.8 million. Not quite $20 million, but the cash burn in this company is quite high right now. And in the 12 months, they burned through almost $18 million of cash. And it seems like the burning of cash is accelerating. And this could be one of the reasons why the market is punishing this company right now. They don't like what they're seeing with the financial data, don't like what they're seeing with the growth in receipts being overtaken by the growth in spending. They want spending to be reined in. They want to see operating cash flow to heading towards zero or even becoming operating cash flow positive, and then free cash flow positive after you take into account capital expenditure and intellectual property. So there are many reasons why the market is currently punishing this company, and this is one of the reasons. Now, in saying all that, when you look at the receipts history for this company, it's really impressive. If you go all the way back to the quarter they actually listed on the ASX, they only received $540,000 in receipts, and that's grown to 29 million. So significant growth in receipts over the past, how many years is that? Six years. Significant growth. That's really good growth. And it's consistent growth as well. Each quarter is up from the previous quarter. Not exactly, but a definite trend in receipts. In fact, at one point in time, particularly after the December quarter 2020, where they saw $25.8 million of receipts, you could have actually put in an exponential curve. But that's really, that exponential curve is no longer valid because we have seen probably anemic growth in their receipts over the past few quarters. In fact, the last quarter, receipts only grew from 28.7 million to 29 million. That's not a sign that growth is slowing, but it's also not a sign that this is just a one-off. So I'll have to wait for the next few quarters in receipts to see if receipts do grow at a significantly higher rate than what we saw in the last quarter. So there are signs that growth could be slowing, and this is some of their performance highlights. I'm not sure if these performance are highlights or lowlights. Anyway, so MRR, which is monthly recurring revenue, only grew at 3% quarter on quarter. Revenue grew at 5% quarter on quarter. So all these are quarter on quarters. Customers only 4% quarter on quarter. Total ports 6%. Total VXCs 7%. Total MCRs 11%. So I think another reason why the market is punishing Megaport is they think the growth in this company is slowing down, and there are signs behind that. They would like to see better growth, particularly for a company that is not profitable and is not operating cash flow. They're concerned that the cash burn this company is experiencing will continue over the next few years, potentially, even though I think the CEO came out and said they hope to be profitable by the end of this year. I'm not sure that's going to happen. So a lot of things have to turn around for the market to get excited or become excited in this company again. I think the growth in a lot of these financial metrics, if you call them that, company metrics, maybe, I think the market wants to see some higher growth. Even though these quarter-on-quarter growth do seem low, if you look at year-on-year growth, they are still quite impressive. So I think Megaport is still growing, but the question is, the growth is slowing, and will that continue over the short to medium term? That's all I have for this video on Megaport's Appendix 4C for the March quarter. Market did not like it. Share price down 30%. Now, this does raise an interesting decision for those shareholders who are fairly bullish about the long-term potential of this company. Share price has decreased from $22 to $9. A market cap from 3.2 billion to 1.4 billion. So this company is much cheaper than it was. But is this a falling knife situation? Can the share price fall a significant amount from here? Would it be feasible for the share price to fall to $4.50? Another 50% drop from here. I think it is feasible because the market is at this point in time fairly negative around this company. So I wouldn't be surprised to see the share price fall further from here. And in these sort of situations, this is my own personal preference. I'd like to see some evidence about the share price turning around, a shift in sentiment, and preferably, I like to see that evidence coincide with some good financial news from the company. So if you do have any questions about Megaport, or maybe any other company that has released Appendix 4C for the March quarter or Appendix 5B, love to hear your opinions, your thoughts, your questions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.